Holy smokes, everyone. It today couldn't get any crazier. It just did. What happened this morning is Treasury Secretary Janet Yellen says rates may have to rise somewhat to keep the economy from overheating and also to keep inflation under control. This sent the stock markets absolutely plummeting in early trading hours. The Nasdaq was down almost 3%. And the S&P 500 was down almost 1.5%. This just shows you how fragile the markets are right now. The markets know we're in a bubble. They're looking for an excuse to sell. But every time there's any issues, every time the market sells off just even 1 or 2%, you get all these elected officials have to come back in, correct what they've said, and then they have to say, no, we didn't say that. They have to take back their word and they have to talk the markets up again, because the markets, the only thing lifting them up right now is confidence. And all it is the elected officials. Jerome Powell, he gets up on his pedestal every time the stock market falls down. He says, no, we'll keep on printing money to infinity. We'll keep the money printers going forever, and that will keep the stock market booming. But in this video, I'm going to get into exactly what Janet Yellen said, and then she actually bit her words, she swallowed her words, and she changed her tune. I guess she must have got a call from Wall Street, or got a call from her friend Jerome Powell and said, what the heck are you doing, old lady? You don't change your words right now. We're putting you in a home. Okay, so first things first, let's get the facts straight, exactly what she said, and then we'll go into how she retracted her statement. So it says here, Treasury Secretary Janet Yellen conceded that interest rates may have to rise to keep a lid on the booming economic growth brought on part by trillions of dollars in stimulus being spent. And it's not just these stimulus packages, there's even more stimulus packages and more spending that Joe Biden's announcing. And of course, we're all going to have to pay higher taxes to fund it. So if you watch this video, she literally says that interest rates may have to rise, and I'll quote her word for word. Quote, "It may be that interest rates will have to rise somewhat to make sure that our economy doesn't overheat," Yellen said during an economic forum presented by The Atlantic. So everyone, she can't take back what she said. It was out there in the public, it was recorded, but these officials eventually do slip up. Sometimes they say things that maybe they shouldn't. Maybe she's got some insider information because she used to work at the Federal Reserve. She used to be the Fed chair. And so sometimes these things slip, but then she had to take it back. So this is a complete joke. Literally 2 to 3 hours after she said that, once the stock market started selling off and plummeting, once there was mass panic and fear in the markets, they had to get the old lady back on her soap opera and calm the markets, soothe the markets, tell them a nice bedtime story so the markets can go to sleep tonight and not have any bad dreams of a stock market crash tomorrow. So look at this, everyone. Yellen clarifies inflation remarks and says the Fed doesn't need to hike interest rates. So it says here, Treasury Secretary Janet Yellen said Tuesday afternoon she wasn't forecasting interest rate increases to rein in inflation spurred by President Joe Biden's proposed spending. But everyone, this is not a debate anymore. Inflation is already here. The cost of everything is skyrocketing. Food's going up, energy's going up, housing's going up, commodities are going up. We've got asset inflation. Everything is booming out of control, and you've got Jerome Powell and all the government officials sitting there in their ivory towers looking down at the peasants saying, no, we're not going to do anything. We'll throw you a bit of chump change here to keep you quiet and keep you happy. Meanwhile, $1,400 next year is not going to buy you barely anything. Look at how she changes her tune here. And look at who she's talking to when she says this. This just shows how corrupt the government is and how much control the markets have over the country. Really, these elected officials, they're just puppets. Really, at the end of the day, it's the shadow banks, it's the banks. There's big, rich individuals that are really lobbying and pulling the strings here. And so she speaks to Wall Street directly. It's not something I'm predicting or recommending. That's just what she just did. She just predicted it. Yellen, a former Federal Reserve chair, said during an online event hosted by Wall Street Journal. So she's speaking to the Wall Street hedge fund institutions. All these hedge funds literally would have had all the hedge funds and all the people in Wall Street calling her up saying, what are you doing, lady? Our stock portfolios are plummeting. Won't someone please think of the billionaires? And she just continues to lie and lie. Listen to this. Yellen said she didn't anticipate a bout of persistently higher inflation, but if one occurred, the central bank has the tools to deal with it. Yeah, they're going to have to lift interest rates. Or will they? Are they just bluffing? There seems to be so much mixed messages in the markets right now. All the financial analysts and people in government saying, yeah, we got inflation. Yeah, the economy's booming. And then you've got Jerome Powell saying, nah, we haven't got inflation. Look, we still have a lot of work to do. The economy's not really too hot. We're going to make money printer go burr to infinity. The Biden administration has proposed an additional long-term spending package totaling about $4 trillion on top of the $1.9 trillion pumped into the economy beginning in March to combat the pandemic. And guess what? This news was so big, it literally went to the White House because all the people in White House, they've got millions of dollars invested in the stock market. Wall Street and all the big banks, they speak to people in the White House. They're all interconnected. And Yellen, she was speaking to banks. She was having speaking talks and getting paid millions of dollars to speak to the banks before she got in office. So it's just a revolving door. They go into the banks, their hedge funds, and they go into government, and it just keeps going on and on. So Yellen's morning comments featured shortly later at the daily White House press briefing. That's right, the White House has to keep pumping the stock market, with the White House press secretary saying that Secretary Yellen certainly understands the Fed's independence. Yes, they are meant to be independent, but they're also meant to act in the public's interest and do what's right for the public. But of course they don't do that. They do what's right for the markets and the financial system, because the financial system is absolutely broken. And guess what happened today as well? The Fed's repo market operations were due to wind down today. And I'll show you a chart, and this is what a subscriber sent to me because this is what I was talking about in my video earlier today. You can literally put a chart of the Federal Reserve's balance sheet and the S&P 500, and it's 100% correlated. Look at this chart, everyone. The blue line is the total assets of the Fed, ECB, BOJ in dollars. So this is all the central bank's balance sheet, and the red line is the S&P 500. You can see the balance sheets of the central banks around the world have been skyrocketing, and so has the S&P 500. And you can also see when there's dips in the balance sheet, the S&P 500 falls as well. So this is why they don't want to turn off the money printers and they don't want to take the punch bowl away, because the markets now watch this. They now see this as a correlation. So if they see the Fed start tapering, then the markets are going to have to sell off as well. And so obviously the dollar reacted to this, the dollar increased, and that sent Bitcoin down a bit, because Bitcoin is not only correlated with inflation and correlated with a lot of these high tech stocks. Normally when the high tech stock market sells off, you can see Bitcoin selling off as well. But if the dollar increases, that's bad for Bitcoin. But commodities reacted well today. The commodities iShares S&P GCI commodity index went up 1.45%. So if you want to hedge against this stock market going down, or if you've got a lot of stocks in your portfolio and you don't want these big swings, is it a good idea to hedge against inflation, to invest in some kind of commodity index? Again, it's not financial advice, but this is just what I'm doing, because if the stock market goes down and performs well, as long as inflation is going up, commodities are going to perform well, especially with all these supply chain disruptions and huge amount of pent-up demand. Everyone, inflation is here. It is real. The economy is overheating, and they have to do their job and lift interest rates to get inflation under control. Unfortunately, that's going to mean pain for the stock market, for the housing market, but really this whole wealth effect is a scam. Unless you got $1 million, $2 million in the stock market and multiple properties, it doesn't benefit you inflation. It only benefits the rich. But say for example, you got $10,000 invested in stocks, and you see your stock portfolio go up 10%. You may say, yeah, keep that money printer going, Jerome. But meanwhile, you've made $1,000 on the stock market, but your annual cost of living is going to increase anywhere between $5,000 and $10,000. And it's not just the interest rate hikes that are a risk to the markets right now. Also, there's going to be huge amounts of tax increases for the rich. They have a lot of money invested in stocks, so this is bad news for them. And this is also going to affect the middle class that invest in stocks, because Biden wants to increase the corporate tax rate from 21% anywhere between 27 and 28%. And also he proposed that the capital gains tax could increase from 20% all the way up to 39%. So that's just going to be more pain for the markets, and the markets haven't really fully priced that in just yet. Now look, there is a scenario where in dollar terms the stock market doesn't fall, because if we do hit hyperinflation or very high inflation, then the stock market will go up in dollar terms, especially if the US dollar falls. But in real terms, when you factor in real inflation, and really the increase of money supply is what they used to use to record inflation. So if real inflation or the money supply is increasing at 30 to 40% per year, and say for example, the stock market doesn't crash in dollar terms, it only goes up 5% over the next year, well in real terms, it's actually gone down 20% because it's buying you 20% of less goods and services. So everyone, it is going to be a crazy 6 months ahead in the markets. There is so much complacency. There's a lot of new retail investors and even gamblers. Warren Buffett and Charlie Munger says all these gamblers are now getting into the stock market. They're buying stocks on market. They're buying derivatives. They're buying call options and longs and forwards. So it may be time to really look at your position and think, is the stock market going to have the crazy returns over the second half of 2021 as it did in 2022? I certainly don't think so. So you may want to look at diversifying in some other asset classes like commodities, precious metals, even though they have been heavily manipulated by banks and central banks, which I'll do a video on later. And even though Bitcoin dropped a bit today, I am bullish on Bitcoin in the long term. For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all updated in the latest that's happening in the markets, in global finance news. And of course, if you're bored, I'll put up some of my other videos here. I'll see you there.